the only way to, in effect, bring some justice in COMEX and the derivatives market is to stamp out fraud in the physical market.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're always honored to have this returning guest. John Adams is an Australian economist. He's actually the chief economist at Good as Gold Australia and the founder of adamseconomics.com. He joins us again this Tuesday, May 10th, 2022. John, thanks for coming back on Liberty and Finance.
Thank you, Donegan. Always good to talk to you.
The theme I'd like us to focus on today is one that's near and dear to your heart, and that's truth. Bringing truth to where there are shadowy, murky, and potentially misleading and intentionally misleading situations that are of real impact to people's financial futures and other aspects of our lives as well, politically, etc. We've recently been through a very contentious regime change in the U.S., and we've also been anticipating, and with increasing clamor from many different corners, a potential financial crisis coming, not just in the U.S., but globally, of which, or in preparation for which, many countries are seeking refuge in shoring up their sovereign gold reserves. We've had repatriation requests from Germany and other countries over the last decade that met with some resistance, delays, foot dragging, etc. We've had repeated refusals by the U.S. to do a new audit of their gold reserves and publish the results of that. You've questioned not too long ago the integrity of audits that have been done in the Bank of England on behalf of Australia and other countries. And you've also, just in the last week, we've seen two stories come out, both about questionable integrity of audits or the lack thereof. And this is all at the same time that we have basically what's been dubbed as the Ministry of Truth being founded in the U.S. So it seems that the new normal is spin and deception and question and murkiness rather than clarity. And that doesn't help anybody to be aware so that we can be aware and prepared. Can you bring us up to date on the latest research that you're doing about the necessity of, the importance of sovereign countries doing their gold audits, and what your latest concerns are that that's not happening or not happening in a way that's clear, transparent, honest, etc.?
Sure. Obviously, a lot of your viewers and a lot of precious metal investors across the world will be sort of, quite concerned with what is happening with the price. I mean, I think we're in the day 16 or day 17 and silver falling. Gold has had a number of days where it's shown tremendous weakness. And we're seeing a whole host of assets fall as well, stocks, cryptos, etc. So there's obviously a lot of concern about in terms of the future, in terms of monetary policy, etc. But within that context, so in theory, with all this raging inflation, when you have rising inflation and negative real interest rates, which America does, you'd expect to see some rally in precious metals, and we just haven't seen that. And even on Kitco News, of all places, only last week, where did they ventilate the whole subject of gold and silver manipulation? And they had, one of their prominent guests basically come out and say that it's no longer, his previous position was gold was being managed. Now he's saying it's out and out gold is being fully manipulated, which is, it's music to my ears because, you've been talking about that on your channel for several years. And now Kitco is, for many years, they were shunning away from any conversation of this. But in the last week that they allowed someone to ventilate this for a good 10, 15 minutes, I thought that was very interesting. But I think the key point about manipulation is that a lot of American analysts and a lot of the people on your show tend to focus on the futures market, COMEX, tends to focus on the OTC market and what's happening with London. And that obviously has a lot of implications for the short-term price of gold and silver, but also in terms of the volatility. But there obviously is there is a relationship between the physical market and how that physical market interacts with the derivatives market, and so when you and I last March were starting to talk about unallocated, pool allocated products, the integrity of those issues at the Perth Mint, and only in the last week we've seen new issues with. In terms of the Bank of Lebanon, very dodgy audit processes. They didn't allow, I think, Deloitte and Ernst & Young to see the gold that they supposedly held. You've got Denmark with potentially, in terms of missing serial numbers. In the case of Australia, a senator went before the Australian Senate and talked about duplicate serial numbers and fake gold bars at the Bank of England. So you've got a whole bunch of problems in the physical market. And so what I have been looking at in the last 12 months, and I'll be commenting on this more as we go forward into 2022, is the only way to, in effect, bring some justice in the in COMEX in the derivatives market is to stamp out fraud in the physical market. So my view is that there's fraud right throughout the supply chain process. So whether it's the wholesale market, derivatives, and then you've got things like leasing and a whole host of other issues. But then obviously you've got situations such as in 2007 with Morgan Stanley, where they took investor money, said they were going to buy silver, charge storage fees, and they bought no silver at all. And then they had to pay back $4.4 million in the class action. And their legal justification was that this was standard industry practice. So I think there's these fractional reserve schemes in the physical market. I mean, the impact of that is they artificially expand supply and assist the suppression of the price. And that obviously places less pressure on these derivative markets as well. So now, I think a lot of analysts in the American market, particularly on YouTube, and a lot of your guests, talk about trying to bring some sort of justice in the derivatives market. And by focusing on COMEX, you're going to get the price to go to its sort of natural and real value. I just don't think, given the way the American financial system works and the legal system, that you're going to get the CFTC and the Department of Justice to really stamp down on the real heart of the COMEX scandal. Obviously, we've seen some positive moves by the Department of Justice in finding JP Morgan $920 million for spoofing. But I think the manipulation on that is well beyond spoofing. So spoofing is one issue, but there's many more problems happening in terms of what's happening in London with the OTC market and then in COMEX. But the only way I think we're really going to drive the price higher, and obviously I'm more focused on silver than in terms of gold in terms of my personal investments. But we've been stuck below $30 ever since 2020, and there just doesn't seem to be anything from a macroeconomic perspective that's going to get above the $30 ceiling. Now, my strong view is that if we can identify instances of fraud or lack of integrity or fractional reserve schemes, whether it's unallocated, pool allocated, or even segregated allocated accounts, and you actually, by exposing those problems and actually rectifying those problems, what you're actually going to do is you're going to actually, in the physical market, reduce supply from an artificially inflated level to its real physical level, and by doing that, that's going to exert a lot of pressure on these derivative markets, and so that's why I think, particularly when it comes to audit practices, whether they are in the private sector or at the retail level, say they're the Perth Mint, or even in terms of central bank integrity, whether it's in the case of Australia, and just to I think update your viewers, I'm not sure what we spoke about in the last episode, back in late March. The Reserve Bank of Australia told the Senate that they were planning to do an audit shortly of their reserves at the Bank of England. And only a few weeks ago, I emailed the RBA and asked them, well, when is this audit taking place? And they responded and said that the audit had been already completed, and that in due course they'll be releasing a summary of the audit. Now, the summary is an important aspect because in previous audits, and the first audit that was done by the RBA in modern times was in 2013, they have never released any information about the audit on the proviso that releasing this information would harm relations with the Bank of England, which I don't accept, and senators in the Australian Senate think that it's a completely fallacious excuse. So we're going to obviously wait and see what happens when they release the summary, and I'm very focused about the audit methodology and whether it was actually a sound audit or whether they gave the Bank of England enough opportunity to potentially alter any potential audit results. But obviously, once you start to see problems in the availability of silver, or problems with the redemptions, or problems in audit methodology, it obviously signifies that there are systemic problems in the physical market. And so that's where I think, to the extent that investors or advocates or analysts can actually play a proactive role, and in the case of in terms of what I do here in Australia, when it comes to say in terms of the RBA and its gold holdings, I mean, I do talk to senators quite often about this subject, and I sometimes help them prepare questions and research notes, etc. I think that's where our focus should be, about identifying problems in the physical market, whether it's public sector, private sector, wholesale, retail. And then if we can identify instances where there are problems and rectify those problems, ultimately that's going to have implications on the paper market. And then at some point, kind of like what happened with nickel in terms of the London Metal Exchange, at some point the derivatives market will have to respond by a lack of physical available supply, and then the price will go higher. So that's where I think some of my views have changed in the last 12 months, and obviously we're starting to see more and more stories about problems in the physical market, and I think the more ventilation of those stories and the more action can be taken to improve transparency and accuracy in the physical market, that's our best chance to getting gold above, say, $2,050 per ounce, or silver above $30 US an ounce.
Yeah, we're going to include in the description of this video, so folks, if you want to look at those articles that John mentioned about trouble with the Denmark bar serial numbers missing and trouble with other audits, we're going to include those stories in the description of this video if you would like to look up those further. These aren't just things that are being said, these are actual concerns that are being expressed by officials. One of the things that you mentioned in passing there, John, was there's been this, when you have dishonesty or fraud in the physical market, you get this artificial elastic expansion of apparent supply, which can absorb more and more investors' funds. You talked about this over a year ago about pool and unallocated accounts. If they can just keep, you can keep investing, and they keep absorbing more and more fiat in investments from investors and claiming, don't worry, you've got there's some metal under there somewhere. But as you point out, that when it really comes to be crunch time and it's time to show what you've actually got and actually account for it through an audit, that when it's discovered, if it's discovered, that there's much less actual physical than has been previously claimed, and there'll be some, all this finger pointing and irregularity. Who knows what'll come? But when that realization hits that there's much less physical than was previously assumed, then that implies all of these funds that have been absorbed elastically into this fictitious pool of metals are now has to be accommodated by the actual much smaller physical pool. That's where I think, if I'm understanding correctly, you're saying the natural consequence of that, just due to the laws of nature, is that the price would have to go up to accommodate for that.
Yeah, so obviously, if there is a lot less physical supply, physical supply in the physical market, that obviously will have implications for in terms of what would happen in London, what would happen in New York with the COMEX, etc. And I have to say, Dunnigan, that and I'm going to write an extensive article about this later in the year, but just to sort of foreshadow what I'm about to write about this topic is, so I think this issue is fundamentally a potential revolution in the way people should think about the market. So let me give you an example. A lot of analysts have a very basic understanding of how this process works. Central bank prints money, devalues the currency, causes inflation. People try to seek refuge from inflation, buy precious metals. That creates investment demand, and that investment demand will ultimately lead to a rise in price. Now, for example, the Silver Institute only in the last, I think, month said that 2021 was a record for investment demand, and they are foreshadowing that 2022 will be a record for global investment demand in the history of modern day silver. And yet they are still forecasting the price to go lower rather than higher. So that makes no sense. So I've started to think that if any analyst thinks that demand is driving the market, I don't think that's true. And I think I'm going to come to the conclusion that it's actually investment supply that really moves the market. So obviously, if you have infinite amount of not only just paper silver, but the illusion of physical silver that doesn't exist. If you can just create that through fractional reserve schemes and fraud and in terms of rig audits, etc. Well, I mean that ultimately is going to influence the market much more. So, for example, you could have an extra $5 billion of a new investment demand coming in, but if there's no physical. If the investors think that it's backed by physical, but in reality there's no physical, well, investment demand has basically an immaterial effect on the market. And that's why I think what we're going to see as we go forward, as more issues come out in the physical market, we're going to learn that it's actually investment supply that actually drives the market more than investment demand. And it's really the transparency and truth of the physical market that's ultimately going to be the determining factor as to what sort of price point we get and what sort of rate of return that investors will see in terms of whether it's a physical gold and silver or in terms of mining stocks. Now, I have to say, and to be quite honest with this, I mean, this causes a dilemma for both you and me. So you work for Miles Franklin, I work with As Good as Gold Australia, and part of our remuneration that we earn personally is by facilitating the purchasing of precious metals. And so there is a natural incentive for analysts who are linked to bullion dealerships, and a lot of the YouTube commentators do get some remuneration from bullion dealerships in one form or another, or from mining companies. We have a natural financial incentive to promote demand because that's how we personally get paid. But in reality, so 12 months ago, I really believed, and obviously as an economist, it makes sense that more investment demand is going to lead to higher price. I mean that in a free and fair market, that's quite plausible and it's quite reasonable. But given that we're talking about a severely manipulated market, even though it's necessarily not in my personal financial interest to basically say this, I think investment demand is not really what's driving the market. And even if we got more retail investors to buy more gold and silver, I think that's immaterial. What really is material is investment supply, the real state of the physical market in terms of how many ounces actually exist, and actually getting more truth and transparency right throughout the supply chain, so that we clearly know exactly, in terms of what's out there. I think David Morgan has said that in his view there are, sometimes it could be 50 claims, 100 claims per ounce of in terms of real silver that exists in the global market. And so it's all about exposing to the eyes of investors that what they think they own, they don't own, and that they should actually readjust their investment decision so that they can actually get physical silver or physical gold, that they know for sure that it actually exists. And that's where our campaign March of last year about unallocated, pool allocated was so essential, because the thesis I put to you at that point was that if every investor at the retail level in unallocated, pool allocated liquidated those positions where there's counterparty risk and they don't actually legally own anything, and they switch it over to a physical ounce, that in and of itself should basically put a lot of pressure on the physical market, and that obviously would lead to the sort of phenomena about putting pressure on COMEX and derivatives market, as we were just saying earlier in terms of this interview.
Now, what do you think is causing the simultaneity of these audit problems at this time? Do you think this has always been this way? Do you think it's gotten worse and it finally can no longer be contained or concealed? I mean, why would Denmark be having trouble with its audit? Why would Australia and the Bank of England be having trouble with their audit? Why are these audit troubles all coming out at this time?
So my view is that these problems have been systemic. They have been happening for quite a while. So why are they happening now? It is because there is more focus on precious metals because of the macroeconomic environment. So I mean, obviously, as you said at the beginning of the interview, a lot more central banks are repatriating their gold. They're buying more, and obviously, that purchasing process and that repatriation process is in and of itself putting more pressure on the physical market. And obviously, the more it's kind of like what happened with Bernie Madoff. I mean, once redemption started to happen, that's when his $65 billion Ponzi scheme started to come apart, and then it ultimately collapsed. So we're seeing more pressure on the physical market, and obviously, fraud practices that have been happening for quite a while. And remember, Madoff his Ponzi scheme was, maybe 2 or 3 decades in the making. Some of these problems are starting to come to the surface because there's a lot more activity in the market, and things that were able to be covered up in normal times are now being exposed in extraordinary times, like we are seeing now with, in terms of high levels of inflation.
All right, so that we're having inescapable admission by officialdom of the presence of monetary inflation. We have growing concern on the parts of ordinary retail investors and probably those above that in the food chain about what's really going on as far as owning, having true legal title to precious metals. Certainly sovereign wealth funds are concerned about that. Do you believe that it's inevitable that the truth will come out through this process, or do you think it's possible for it to get papered over, distracted, look over here, now there's something else to focus on, and that the spotlight, will just move on, and we won't actually learn the truth here in the next short period of time?
So my view is that if we have the status quo, the system can go on for quite a while longer. So, but obviously, what I think we need to see is some sort of, in terms of a black swan event, where some sort of revelation comes out somewhere across the world where you see a big scandal in the physical market, and that then starts to lead to a flow-on effect in terms of whether it's the auditors improving their standards or investors calling in their silver or gold because they don't trust the counterparty or the bullion dealer or whoever, or you start to see other moves by in terms of market participants. So I think, generally speaking, when you have a Ponzi scheme, whether in the case of Madoff or whether in the case of precious metals or in a manipulator market, you typically need the revelation of a big fraud scandal that would actually, that will galvanize a whole host of market participants to basically alter their practices, and that you get a changed market and a changed outcome. So I think that is where I'm sitting at the moment. But the one interesting thing I will say is that, so when we talk about how can this system perpetuate for so long? I mean, I just actually did an interview with a local radio host here in Australia last night, and we started talking about cryptocurrencies and Bitcoin. And I do think that cryptocurrencies are part of this. It's a phenomena that has allowed millions of investors to turn their eye away from precious metals and to focus on something completely different. And the question becomes on the crypto space is that just a natural consequence of a new invention, i.e. Cryptocurrencies and Bitcoin, or was this purposely designed to create this? And so I'll be doing a show with Martin North relatively soon, but one thing, and I'm not sure about American crypto investors, but last year I did 2 seminars in Australia, and half the audience on each occasion were crypto investors. And I asked them one question: who is Satoshi Nakamoto? And everyone says, we don't know who that is. And I said to them, are you aware that the National Security Agency in America wrote a white paper in the mid-90s about cryptology, cryptocurrencies, and the modern architecture of what we understand cryptocurrencies to be? And and in both cases, that we're talking about maybe out of 50 people, maybe only one person knew that the NSA has had a multi-decade involvement in the development of cryptocurrencies. So now, the reason why I think this is significant is that I have the thesis, and maybe your viewers would disagree with this, particularly given that I'm Australian and you guys are American, that Satoshi Nakamoto may well be the American government. Now, if that is the case, then the question is, well, what's the whole purpose of Bitcoin in cryptocurrencies? What has been the impact on the economy and in various asset classes? And I think that one of the things I've heard Peter Schiff on his podcast say repeatedly is that there's probably, I think there's more than 10,000 cryptocurrencies around the world. So people just create these new projects and it's a new cryptocurrency. So, but what is the real effect of this phenomena? It's the same as fiat currency. So fiat currency just keep on printing and printing and printing. Now, even though Bitcoin has a limited number of in terms of Bitcoins, which is I think 21 million, you can just create any type of new cryptocurrency, and these so-called altcoins, and you just have this phenomena of in terms of expanding, in terms of this asset class. And so what that has done, particularly for a lot of millennials, I can say in the case of Australia, is about 20% of the Australian people have invested in cryptocurrencies. And why? Not because they actually understand what this is from a technical technical cryptology point of view, or they don't understand the history of cryptocurrencies, or they have no idea who Satoshi Nakamoto is. They just see it going up and they go, I want to make some money. And so I think, to come back to your question, cryptocurrencies has played an instrumental role since the global financial crisis to distract people away from the central bank activities, to distract away from the inflation. Now, you can't ignore the inflation now because it's so obvious, but obviously cryptocurrencies has played a role to suck a lot of that new money that has come into the system away from precious metals into these cryptocurrencies. And obviously we're seeing cryptos crash at the moment. So it'll be very interesting to see that if the Jerome Powell and the US Federal Reserve, if they do pivot, if they stop tightening monetary policy, if we go back to a new loosening campaign, will these millennials go back into cryptocurrencies, or will they realize that there is, it's just another fiat phenomena, and they need to actually get something real and tangible, and they ignore crypto and they come back to in the traditional forms of money, gold and silver. So that's a really interesting thing. So I do think there's a really big story about cryptocurrencies and what role has it played in the precious metal space over the last maybe 12, 13 years, ever since it was invented.
So there's another big story that's been going on about truth. I mean, ironically, just last month, the United States government just announced the formation of a new department or sub-department of the Department of Homeland Security for dealing with what has been dubbed the Ministry of Truth, basically arbiters of disinformation to officially scrutinize and search for and act against what is officially determined to be disinformation. And my son Elijah interviewed constitutional attorney Edwin Vieira on this weekend, and he identified just numerous problems with that approach of who's checking the checkers, how do you know whether there's recourse against you if they accuse you of disinformation, and on and on and on. How unconstitutional is this? It has problems with the First Amendment and the Fourth Amendment, and on and on. This is coming at a time when there's still a significant concern about the legitimacy of another audit, or multiple audits that have happened, not on physical precious metals, but upon I would say, issues regarding regime change in the U.S. And you had wanted to encourage people to consider a journalist who's been speaking out about this, publishing about this, and it seems like another example of where trying to find the truth is being very difficult for ordinary people, because it often feels to people that what they're observing with their eyes, with their senses, with their common sense, doesn't square with the story that's being promoted by either the mainstream media or government officials, etc. Your thoughts on those latest developments?
Sure. Yes. So for sensitivity reasons, we can't sort of speak openly about this subject. The only thing I will say is that the U.S. conservative academic Dinesh D'Souza has come out with a new documentary, and I had the opportunity. So it's Wednesday morning here in Australia. I had the opportunity to watch the documentary last night, and it was quite stunning in many areas. In some ways it was shocking, but in other ways it wasn't so shocking, because I had the same suspicions in terms of the particular subject that he covered. And so all I would suggest is, if you have the opportunity to go watch the latest Dinesh D'Souza documentary, please go do so, because I think, particularly if you're an American, it'll open your eyes to into how the real world actually works. And the other thing I will just say, Dunnigan, is that, for example, in 2019, when I led a campaign with a bunch of people across Australia to oppose the government's law against the $10,000 cash transaction ban that the government had proposed. Now, me and my co-host Martin North, we led the campaign. We broke the story before the mainstream media. We talked about a range of different things, and we had the Australian Financial Review, which is Australia's equivalent of the Wall Street Journal, write a one-page, literally a full-page article about me and my co-host, and said we were conspiracy theorists. Now, 16 months later, we defeated the legislation because we were able to bring enough rigor to the subject and demonstrate that the government's reasons for the legislation, it didn't stack up. I got to testify to the Senate. We mobilized thousands of people to put enormous pressure on Parliament. And, and I think I've said in a previous show, we were probably the second country in the developed world to stop this type of law around criminalization of cash. So Germany was number one in 2016. Australia happened in 2020. A whole host of European countries adopted these laws. But if the powers that be want to push a particular angle or a particular set of agenda, if you now, I will say, to be fair, there's a whole host of people, particularly on the internet, who come up with some of the most ridiculous and outrageous concepts and ideas, and they promote that as truth. And a lot of that is complete fantasy. I mean, one of the ones that constantly comes up is this quantum financial system. I mean, look, it's completely bogus. I've seen no evidence of it. The various people on YouTube who promote that sort of concept don't have any sort of rigor about their claims, and they present no evidence to support things like the quantum financial system. So there is, if I can be honest, there is some genuine disinformation, misinformation by, conspiracy theorists, fraudsters, etc. But there's also truth tellers and people who apply. So my background, really, before I was studied economics, I was a maths guy. So maths and statistics is the natural thing I like to do. And because I've played chess all my life, my brain is designed or sort of configured to look for patterns. So when I see patterns and I see statistical anomalies that don't have a good explanation for it. Kind of like what happened with Harry Matopoulos and Bernie Madoff. Statistical anomalies tend to suggest something's wrong, potential fraud, or there's something other than the official narrative. And in those situations, it is legitimate to question them. And, obviously in the case of the Biden administration, it's disappointing that they've now created a new agency to crack down on what they call disinformation, misinformation, because I think what this agency is going to do is not go after the charlatans who are pushing fake theories. I think they're going to go after some of the truth tellers where they're picking up on the agenda of the elite, and they won't allow those people to speak out with an alternative explanation or hypothesis as to what's really going on.
Yeah, Dr. Vieira pointed out that the justification that is given for the formation of this new department does name some very specific and fairly narrow categories of concern that seem to be especially timely ahead of some upcoming events. And sometimes that's not to be mistaken. People should take a good hard look at that. Is why would you create a whole new department to handle something that's considered a threat, and then blame it on another actor, blame it on something else, rather than admit that that as U.S. Senator Rand Paul just recently said, that the U.S. government has been demonstrated and proven over decades to be one of the most flagrant purveyors of disinformation and cover-ups of things that are actually injurious to not only its own people but other people of the world. So it's very concerning to see a development that was predicted by the book 1984, written by George Orwell in 1949, seeming to come to light in the present. And I think we need to keep a close eye on that. And the reason I brought it up was not only because it's in the news right now, it's something that's available right now, as you just mentioned, a documentary just came out, but also because it fits into this theme of truth. And from that comes awareness, and that's what we're about here, is awareness and preparedness. You've mentioned you've got ongoing legal work, research, etc., that you can't speak freely about at this time, but that we may get revelations of within some near-term period of time. So we're very eager for that. And meanwhile, if people want to follow what you can write about and talk about, how should they get connected?
Sure. So I'm basically on I'm on Twitter, Adams Economics. I have a group on Telegram, Adams Economics. I have a Facebook page, Adams Economics as well. I have a website, adamseconomics.com. So it's been a while since I've written some articles, but it's something I'll be planning to do. I have a free newsletter that people can sign up for, and I just communicate when there's something important to do. The main YouTube show that I do is in the interest of the people with my co-host Martin North, and people can feel free to go and watch some of our revelations on that. And we actually covered a very important revelation recently, which was about, and maybe perhaps it may be interesting from your perspective, Dunnigan. So in 2015, a senator in the Australian Senate made a powerful address about a conspiracy involving elite pedophilia among politicians and judges in Australia, and that has been hushed up for decades. And so this powerful address has spread like wildfire in Australia within social media, and the politicians, the modern day politicians, and the media don't want to even touch the subject. And so we had some new information that came across my desk in the last couple of weeks. So we just did a show about it only in the last few days, and we've put it up on YouTube. And one about justification for why these allegations need to be addressed in one form or another is because of what's happened in America with Epstein, what's happened in America with, in terms of Jimmy Savile, who worked at the BBC, but also, there was a big revelation by 60 Minutes Australia about an elite pedophile network in the UK that had operated for 40 years, including members of parliament, diplomats, judges, MI6, etc. So there are some deep secrets among the elites, and in the case of America and the United Kingdom, some of those secrets have been revealed, and there's obviously a process of trying to stamp out some of these long-held practices in your country and across the pond. But there is still a lot more work to be done in my country. And hopefully we've got an election in a week and a half, and hopefully after the election there'll be an attempt, or there's an opportunity to actually bring some of these allegations to some sort of investigation and conclusion, because there's just a lot of Australians who have lost confidence in our institutions, in our democracy, because these allegations from 2015 just have not been addressed, and they've just been dangling out there in the ether for 7 years.
Yeah, that's gravely concerning, both the intrinsic subject matter that you're talking about there, as well as a supposition by administrations around the world that the act of causing doubt in the integrity of processes or systems, or the undermining of public confidence by bringing up concerns is in itself wrongdoing. It's like, that's something we've talked about before, is the necessity of bringing up concerns in a free world, and as part of free speech and part of finding the truth together through vigorous open debate. So, John, there's so much more that we could talk about, and we need to again, but grateful for the time that you've spent with us here, and always on behalf of all of our viewers, thank you for joining us here on Liberty and Finance.
Thank you, Donegan.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.